What's going on, guys? So today is another episode of my weekly videos where I try to teach you a little bit of trading or share my strategies with you. So today I'm gonna focus again on the US 30. It's similar or more or less the technique of my last video, but I'm gonna show you how the strategy went this week, because these patterns for the US 30 or Dow Jones repeats itself over and over again. So this week we had again a couple of opportunities for the same strategy that I showed last time, and so I want to go over the strategy again. So here it goes. So in front of me again is the US 30, and right here we can see a dip, and those kind of dips happen more or less once a month, about once a month. And if you take a look at the EMA, most of the times it comes down to retest a specific area or a specific EMA, a specific moving average. For example, if you take here a look at 2000, it came down all the way to 200, to the 200 EMA. Here last year in March we dropped completely, which was due to COVID, but so every once in a while we retest the 200-day EMA. The 20-day EMA is not really getting retested, since we are trading along it for most of the time, since the this is usually trying to go to the upside. But here sometimes we come closer to retest the 100 EMA or the 50 EMA. So all those kind of dips occur here the bigger ones maybe once per month. So if you go down to small time frame, you can see we always form here kind of a nice uptrend, and we see here some dips. This is the 4-hour chart, and usually this happens after some kind of bigger dip, like here when we had the Corona situation, and then we had a nice uptrending line here. Here again, the dip was last year in October. I'm not quite sure what happened here, but again after a bigger dip we saw this nice trend line. And so this is the 4-hour chart. Now again, if you take a look at the 1-hour chart, so this was this week. And so here we came to this, well, more or less to retest this support line here, support rectangle, whatever. And right after that we bounced back from the support level. So here the RSI was clearly very low. We came to 15 more, 14. And if we take a look at the MACD, we saw here a crossover between the short and long line, which means a change of direction to the bullish upside. So we were I mean almost minus 250, which actually doesn't happen that often, as you can see. So this is also typically an indicator that we might turn around from here. Now this would be a different strategy and I don't want to talk about it today. So what I actually want to talk about is this one here. Let's take a look at this one. So basically we saw here this kind of change of this change of direction and formed a bullish sign. Now here we crossed above the 20 EMA on the 1 hour chart, which is yet not a typical sign that we will go higher, because we might get rejected and at the next resistance levels here and then pull back. But here we had a very bullish candlestick, and now we are trading between the 50 EMA and the 200 EMA, but slightly lower. So we are still on a, it is not a bearish momentum or a bearish movement, but we are below the 200 EMA, which typically indicates a bearish momentum. But here the possibility is that we might change to the upside, which is exactly what happened here. So you want to focus, or once we come here somewhere around breaking the 50 EMA and start trading within here, you want to focus on these levels here, and then what happens next happens, because we still might get rejected and fall lower from here, or we might get higher as we did this week. So if I mark this area just quickly, now if we take a look at the 5-minute chart, so the strategy is actually really simple here, or more or less it is the one I showed in my last video. So now we saw this trend on the 1 hour chart between the 50 and 200 EMA, even though we were below the 200 EMA on the 1 hour chart, which is well, it is not always a bearish momentum, because like I said, we can always turn around and go suddenly break out and go higher. So you want to focus on this area. This is what happened here. This big candlestick here was on the 1 hour chart the move up from the 20 to the 50 EMA, and so here we had the bullish crossover on the 5-minute chart, which is always what I'm looking for. And suddenly here on the 5-minute chart we are on a bullish trend, since the 200 EMA is the lowest EMA and the 50 and 20 are all above it. Now the trade is always the same. At some point we come back to retest the 200 EMA levels, which is exactly here, and which is exactly at a previous resistance area, which was here and here. So a previous support and resistance level. And now we want to take a close look, and we want to see the candlesticks coming pretty close, maybe even touching the 200 EMA. Now, like I said last time, the first indicator is retesting the 200 EMA, which is here, and the 200 EMA should be at a support resistance level, which is exactly what happened here. So this is 1 or 2 points, doesn't matter if you call it 1 point or 2 points. And the second one was the RSI being pretty low, which happened here. So this would be here, and the second or the third or fourth, depends on how you look at it, was the crossover between the long and short line on the MACD, which happened here. So this would be this candlestick on the 5-minute chart. Now the trade is pretty simple. We target, since we are on an uptrend, we go for a long position here. The entry point would be here, and the target would be at least 1 to 2, since you want to go for, as a beginner, at least for 1 to 2, and we want to at least target the previous highs or go even higher. So well, this is about 1 to 2 risk reward ratio. As you can see, after that the MACD went higher from there again, but the thing is, what you want to do is take the first profit, which means take the first trade and get out after. Well, if we take a look, so the trade started at 3 o'clock and lasted until 7:40, 3:20. So about 4.5 hours. Now, you could have, of course, waited for the next couple of hours or maybe even a day, but this is not usually what you want to do when you scalp, and you could have taken your profit here. But the thing is, you never know how high the market will go, or maybe we get rejected here and suddenly turn around. So this is why you want to take a simple 1 to 2 risk reward ratio, because at the same time we saw here retest at the 200 EMA again, and again it was a support and resistance line here that we retested. The RSI again was pretty low here, and we had here the bullish cross, so this here would be your entry. And again we target the same strategy, long position here somewhere, and you want to go for 1 to 2 risk reward ratio, so this would be somewhere around here. And this is why you want to make it simple with the 1 to 2 risk reward ratio, because you took the first trade here, you had a win, and here's the second one, so in this case you would have had a win again. But the thing is, if you wait, especially when you scalp, which doesn't make sense to wait much longer or a couple of days, you don't know if the market will go until 1 to 6 or 1 to 5 risk reward ratio. So you want to take the first one, 1 to 2, just simple as it is, and then you can always take the next one, because now you have a win, and if the next one is a loss, you still have, you should still be in profit. And here you actually could have made 2 times a profit. So then what happens after that? Usually here we saw a similar pattern, but the RSI suddenly, or the RSI went below the 30 levels, which was when the candlesticks fell below the 200 EMA. So this trade wasn't an entry point. Here we never had a crossover, so you could have just waited. And then again the market turned around, turned to the bullish upside, and here we had a similar trade, but I don't know if I would have entered this one, because if you take a look at it and form a rectangle here, we were still pretty far away from this support or resistance level here, which I'm not quite sure if I would have entered here. I mean, if we take it longer, we still have a lot of space. So this is why I said you don't need it, but I personally prefer it, that the 200 EMA comes closer to a support and resistance area, because here we still had much time or much room to go. This is also why the RSI was low, but not below the or at the 30 level. I mean, it was 33, 32.87, so pretty close, but this is something that you have to decide for yourself if you want to take the trade here. I personally prefer the RSI being much lower, So this could have or would have happened if we retested it, this support line here and not this one. And so if we had a move like this, I would have entered here somewhere, and so something like this. This is what a trade would have looked like. But this is why I probably wouldn't have traded this one. So here was the scalping strategy and what happened this week. So thanks for watching.